Markets are continuing the reversal as we run out of steam on this Friday afternoon about midday. We'll have to see what the momentum looks like into the close to see how investors are really positioning. Bond yields are up as markets are down. And we'll take a look at a couple of other indicators to keep an eye on. The dollar is up, Dixie is up, and the VIX. I want to show you the VIX for buy, sell signals in traditional markets, which, as we know, Bitcoin and crypto track traditional markets, and everything is down right now across the board right now. The Dow is down 0.79%, S&P down 1.2%, NASDAQ down 1.9%. So it is a red day across the boards in traditional markets as well as crypto. This is Bitcoin on the hourly. And a couple of things I want to take a look at before we jump into Bitcoin. I've got some nice lines drawn on the chart there. But here's a look at the Dow. Let's go ahead and put on these moving averages we've been looking at. This is the 200-day moving average that the Dow has briefly popped up above and now found resistance and broken below. We'll see if it closes below the 200-day. NASDAQ never reached the 200-day. S&P rejected off of it perfectly. And we've seen other instances where this happened back in April before that June low. Perfect bounce and rejection from the 200-day moving average, dropped back down. Well, let's take a look at it. So it dropped basically 20%. Looks like about 20% after the rejection. So if that happens right here, that will potentially be a new low at 20%, brings it down. Yeah, so that brings the S&P down back below and putting in a new low if it continues on that pattern. Of course, that takes time to play out. That was basically 40 days. So it took 40 days to reach that low, had a nice bounce in between. So awaiting confirmation going into next week to see if this was just a big bear market rally or if there's potential continuation. And of course, the Fed speakers, Jay Powell, everybody will be at Jackson Hole next week. Then we have the inflation report coming out in September, and the Fed's response. They're saying they're going to continue the rate hike. And that's what markets are unwinding, is that false Powell pivot that the markets rallied on here from the last FOMC meeting. So the Fed is committed to their work and to their task of getting inflation down. So markets did get that a bit wrong. Of course, they needed fuel to ignite this rally. A lot of short covering going on as well during this rally with hedge funds. And here's the VIX right here. Let's take a look at the VIX. And this is what I was talking about. So one of the things that is a good buy sell indicator on the VIX is to look at the lower levels on the VIX. This is the volatility indicator, volatility index. And when it's at its lows in the 14 to 20 range, that's when you want to be selling. When it's at its highs, that's when you want to be buying. And if you go track these peaks, these were the recent market bottoms in March of 2020. Then you have the 2018 Fed situation. Then there's the 2015-2016 Fed situation. And then, of course, you have 2011. Then you go back to 2008 and 9. This is when volatility index was at its highest. And those are your buy indicators. And then your sell indicators are right in here. And more specifically, you want to sell in the 20s and buy in the 30, 40s, right? So that's kind of how you can watch the VIX. You can study that. But that's a traditionally great buy sell indicator if you're trading. If you're a long-term holder, then you buy when the VIX is up and you hold. So you buy those dips and you just hold for the long term in a bull market. In a bear market, it's very different. Here's the dollar kind of regaining its momentum, tracking up. Another one of the reasons that we're seeing risk assets down, because the risk on trade has now pivoted to risk off. So let's take a look at Bitcoin, and let's look at the hourly here, because everything looks the same across the board. Bitcoin, Ethereum, Avalanche, Solana, Matic, Cardano, Link, Aave, Sushi, pretty much everything right across the board, right? Identical price action, everything kind of consolidating here in this area. So with Bitcoin, I have drawn some trends that we've been watching for the last couple of days. And this drop here has been, I think it's right around 10%, which is what if you've been watching this channel, what I called for the other day. I said we had about a 10% drop coming in based on price action and trends and the ranges that we've been in here. This is the major trend line, and trend lines are made to be broken or used as support. So this trend line has been major support for this little range here. We have the top trend. I can draw that in real quick. Haven't really broken that yet, but we can obviously take a look at what we've been tracking here as this channel kind of continues. That's the upward range of the trend that's been resistance, bottom range has been support. So the real question is, will Bitcoin find support on this bottom trend line again? And if it does not find support, it will likely break below here and then work its way down to this trend line to see if that's going to be support for a reversal or if that's going to break and then continue down from there. And what is this trend line? So I kind of drew a little bit of that yesterday, but let's take a look at this on the daily. And you can see this was the March 2020 low to the pivot low here of this recent June low of 17.9. So if you extrapolate that trend line out from March 2020 to June 2017 or June 2022 and kind of continue it out, you have the major trend line coming down from the peak that price has respected and stayed underneath the whole time. Then these intersect here, but right now this lower trend line, if price were to come down and reject off of that or break and lose this trend line here and come down, that's about 18.7, somewhere in that range, 18.9, 18.5, 18.7, somewhere around there, depending on when that happens. The further out this goes, obviously, the higher the price goes into that 19,000 range, which again, I've been kind of looking at a lot of technical confluence that price will definitely come back down, most likely in all probability, come back down and check that 17 to 18,000 range to see if it's going to hold. So let's remove all of this, and I want to take a look at one more thing that I've been tracking. But those are the major trends that I've been tracking here as this bear market continues to unwind, to see if we ultimately get down and test this 12,500 range, or if price will hold at the 14,000 range, which was this area right in here. But it looks like price is definitely going to come back down and check this $17,000 to $18,000 level, continuing from where it's at now. But let's take a look at the moving averages. So a couple of things we've been tracking. 200-week moving average. Bitcoin has now lost the 200-week moving average. This cross is getting ready to happen, and that's where that 10% drop came from. Whenever this cross has happened in the past, that's the 50-week and the 100-week, whenever they've crossed, price dropped ahead of that cross from the previous all-time high a certain percentage, or not all-time high, but the previous high of that range before the cross. Price dropped here about 20% in 2018. And I mean, we can even go back to 2014 and look at the same thing. Back in 2014, the price dropped from a high of that previous range before the cross to where it crossed down about, that was 30% back then. It was 20% here. Let's see, do we have any other major? So if we do it here, and again, we go to the high point there and drop 20%, that puts price at 19,900, 20,000. So that's kind of where that came from in terms of this drop that I've been talking about based on this cross. Doesn't mean it has to happen, doesn't mean it's going to happen, but it's done it the last few times. And then it went on from there into the to continue on into the uptrend bull market range. But we're in a different situation here. We're in a macro bear market. A lot of the people out there have never been through a bear market before. Macro, a lot of the analysts that you're seeing, a lot of technical analysts out there, a lot of investors have never been through a macro bear market because the last one that we had was 2008 and 9. So there's a lot of people that have never seen that before. And all we've seen since then is, the QE Fed-driven low interest rate, liquidity injected bull market since 2008-9, everything up by the dip, V-shaped recoveries, everything happens fast. So that's just all that we've seen really since 2008, 2009. So it's kind of hard to get your mind around anything different than that. So let's take a look at the daily range here. And here's something else that's interesting, is that Bitcoin has rejected off of the 100-day moving average and dropped. So let's take a look at the last time that happened. Well, it was right here. So price popped up above. Well, let's start from this area here where it first lost it. So it first lost the 100-day moving average here and ultimately dropped 38%. Then it popped, it kind of stayed under that for a while, popped up, lost it again. So the second time it lost the 100-day, it ultimately bottomed and dropped. Let's look at that's another 57% from this point here, where it lost the range here, the 100-day. The ultimate resting place was 57% when it lost that 100-day moving average there. Let's go back and look at it over here last year when that happened, or in 2021. So it lost the 100-day right here, and it ultimately dropped 44%. So you have 44, you have 58, you have 48% there. And then let's go back and look at 2018 when it did this a couple of times. So it first lost that 100-day right here, dropped 49%, lost the 100-day, broke up, lost it right here, just like we're looking at right now, dropped 32%. Same thing over here, popped up and broke down and dropped 35%, popped up, broke down, popped up, broke down, and then rejected off of it right here and dropped another 50% right there, 52%. So we have a lot of confluence in terms of what happens when Bitcoin loses the 100-day moving average. And again, the first time it happened, dropped 38%. Second time it happened, let's go ahead and take this off here so I can scroll around. Second time it happened was right here, and price dropped throughout the entire range 57%. But let's look at the first drop. The first drop before consolidation was 38%. So let's just say 40%. So if price were to drop 40% from here, where it rejected off the 100-day, let's look at first, where's 20%? So 20% again is coming in at 19,000. Let's go to 30% would be 16,976. 40% right around 14,300, 14,400, and then 50% would be 12,000 in change. So it's not unreasonable to expect, if Bitcoin, since it did reject so hard off of that 100-day moving average, for it to drop 30, 40% and land down around that $15,000 to $16,000 range, which we can see going back here. There was a little bit of area here in that. Let's look at it right here a little bit closer. Let's take the moving averages off so we can look at it a little more clear. So right in this area here, there's a lot of support and resistance in that 16.5 to 19.6 range right in here. And that was back in 2020 in that November, December timeframe. So here's coming through September, October in this area, getting into November, December, a lot of support and resistance where price popped up and dropped down right in this area here with lows of 16.2, the peak of this range at 19.7. So it's not unreasonable and probable that price could, if it breaks below that 17.4 range, could go back down and start testing the lower area of this range here to see if there's any kind of support there before ultimately catching this $13,000 to $14,000 range over here. And then of course, a lot of support and resistance in this area previously at 12,200. So a lot of it depends on whether or not Bitcoin holds the trend right here, or if it breaks this trend line right here. So that's kind of what I'm watching right now. And, it's all about probabilities. It's all about what's likely. And of course, the macro picture is weighing heavily on everything because Bitcoin's a risk asset, as a lot of people have learned. A lot of people didn't realize that Bitcoin and crypto were risk assets, especially Bitcoin. The thinking was it was a currency, it was a store of value, it wasn't correlated with markets. I've been saying all along that it was correlated with markets, that it is a risk asset. It's a speculative risk asset, the most speculative of all risk assets. And that's just what it is right now. It's just the reality. It doesn't mean that it's not a good asset to be investing in. It just means that it's a risky asset. There is a lot of institutional interest in Bitcoin and crypto moving forward, once this bear market cycle bottoms out, inflation gets under control, and the Fed can stop doing what they're doing. And those are the things that you're going to need to see an ultimate bottom. As we've been talking about all along, I do not feel like June was the bottom. When markets bottomed in the range in June and Bitcoin and crypto bottomed back then, I do not feel like that's the macro bottom. Given the current climate that we still have high inflation, we still have the Fed raising interest rates, rolling off the balance sheet, doing those other things, I don't feel like that's the bottom yet with all that in consideration. And of course, we still have the war, other issues out there with China, and more potential conflict on the horizon. So there's still a lot of risk out there to markets, to risk assets. And right now, it looks like risk on is turning to risk off. So we'll just see. We'll have to see how this lasts, see what the investors do through the rest of the day, watch what the inflation and the Fed looks like next month in September, and then we can take it from there. But we have to be data dependent, just like the Fed. We have to be able to move, evolve with the changing cycles. And it's all about risk reward. If you're a long-term holder, make your decisions. You have to make your decisions for yourself, what your tolerance is and how long of a time frame you have, what your liquidity requirements are in terms of sustaining your lifestyle and pulling cash out when you need to. If you're trading the ranges, great time to be doing that. Lots of volatility, but you need to be watching the global macro picture, and that VIX is a good thing to watch in terms of buying and selling, entry and exit prices. And then, of course, we have the meme stocks. Let's take a look at that. We did not look at meme stocks yet today, but I've been kind of watching those as well. And we'll just take a look at those real quick, see what's going on. MNMD is the latest meme stock, Mind Medicine Inc. That's been kind of popping from 50 cents up to $1.33, and it's kind of unwound at that move. Let's look at that on the hourly, kind of a mess there. Weber Grill turned into a meme play today, trending on Reddit. Bed Bath & Beyond, a lot of news there about Cohen and what he did, whether or not regulators should be looking into that. But this is completely unwinding that move. AMC is down, especially on news that the Regal Theater parent is filing for bankruptcy. It's unsustainable. Movie traffic just isn't what it was, and a very difficult environment for movies right now, movie theaters. So AMC's future is in question here. So we'll just have to see how this all plays out. And then, of course, GameStop. Let's take a look at GameStop here real quick. GameStop is unwinding that last move as well, but lots of great little volatile plays here in these ranges, if that's a risk that you're willing to take. But unfortunately, I think a lot of people got caught short here in this area, or got caught going long and ended up taking the short end of the stick in that area there. But these are the things that I'm looking at going into the weekend, and we'll see how everything settles out at the end of the day, and see what next week brings. I'll see you in the next video.